Hi investors! Today we're going to be going over our property analysis calculator. This is a calculator that we use to analyze all our deals here in Spain. If you are looking to invest in a property in Spain, whether you are in the region of Valencia, Madrid, Alicante, or even the north, this is the calculator for you. Today, we're going to be reviewing one of the properties that we recently purchased for a total of 150,000 euros. This is a 2-bedroom, 2-bathroom in the region of Valencia, close to the beach, 80 meters squared.
We designed this property calculator so it could be fully customizable. You fill in all the cells in green and the rest is filled in for you. We have the property address and the description to start with, so you can actually have a calculator and analysis per property that you visit, and you can compare. Here we're going to start with the year built of this property is 1992. The listing price, as Jade mentioned, is 150,000 euros. And here we have a scroll down menu of the autonomous community where this is going to be bought. In this case, it's Valencia, but you can choose any of the others, and this will automatically affect the value of the percentage of the ITP that is paid in, or the tax that is paid in every community. Usually how it's calculated is between the listing price and the ITP reference value. This could be asked to your realtor or checked in the catastro.gov.es with the cadastral reference number. And the highest value will be used to calculate the ITP. There's other expenses in the property cost that should be taken into account, which is the notary and the registry. These vary between different notaries. You can ask directly. And the agency fees, usually they're between 3 and 5% of the listing price and is paid by the buyer. In terms of renovations and basic furniture, we have this cheat sheet for you to use, and basically we have the basic improvements, which is paint, change of house appliances. It will be around 100 euros per meter squared. If you're looking into more moderate improvements like the bathroom, the plumbing, the kitchen, refurnishing, this will look into 200 euros per square meter. And a full improvement, if you're looking into changing the roofs, the tiles, the plumbing, the electricity, etc., it will be around 400 euros.
In our case, we bought an 80 meter square that's in pretty good shape. So it just needs a bit of paint on the wall and new furniture and a little bit of fix up. So we are going to be paying approximately 100 euros per meter squared.
And you can actually pick between furnishing the apartment or not including furniture
as well.
So let's look into some of the numbers that we found in Fotocasa, in the main real estate platforms, of how much this could rent per month. We found that, being conservative, this could rent for 1,100 per month. This will be over 13,000 per year. And here you can even include other revenues. For example, if you're going to rent it for shorter periods of time, usually the rent per month is higher. If you're going to rent it for, let's say, mid to low season, and then rent it out during summer season, you can get higher revenues per month. Here we also have to take into consideration the annual increase in prices, the annual operating expense increase as well for the model that you're going to see down below, that is between 2 and 3%, and the annual appreciation, which is over 15%, but just being very conservative, we're going to keep it at 10%. The numbers in Spain, and especially in Valencia, have been between 15 and 20% of appreciation every year, which make investments right now really interesting. The vacancy rate, we're going to put 5% just for being conservative, even though things rent out very fast. Then we have the yearly expenses. We're going to go through the main ones. We have around 100 euros of advertisement for the main platforms. Then we have the maintenance fees, which would be usually around 5% of the total rent per year. So to take that into account as a rule of thumb. We have the community dues, which will depend obviously on the building, but it will be around 30 and 40 euros per month in a flat that has no elevator. In this case, we're going to use 30 euros for times 12 will be 360 euros per year. For the home insurances, we want to be covered in terms of damage, property replacement, liability, other risks, and this will go for around 250 euros per year. The life insurance, if you get a mortgage, of course, this is optional, but they will ask you to pay around 180 euros per year. And then we highly recommend the rent default insurance because you want to reduce risk and just have a peace of mind. So this will be around half of the total rent per month every year. In this case, 550 euros. For the property tax, the EV, this will also depend, but in this scenario, it's going to be around 250 euros. And the garbage fees, which vary between communities, but in this scenario, it's going to be 120 euros.
Before we move on, we haven't taken into account management fees because we have always managed our properties abroad ourselves and now continue to manage them along with other investors' properties. So that's a fee that we haven't taken into account. If you are actually interested in having your property managed, you would have to add that in there. And if you need any help, do know that we can also help with that service.
Absolutely. So if we go into the mortgage, what does it look like? We actually got a good deal, Kate, for this mortgage.
We got a great deal.
We secured a 30% down payment. The loan is going to cover 70% of the financing. And then we got a really good interest rate of 2.2%. The mortgage, we got it for 30 years.
I think these are rates that you definitely don't see anywhere else. 2.2 is an amazing interest rate, and the rates are relatively low right now, even for Spain, right?
Yes, it's actually a good moment to secure a loan. That's why we included it in this operation. So we want to show you how it's going to look like. Now, if we go into our cost and financing assumptions and then our cash flow, we're going to see a little recap here, being the sales price, the 150 that we mentioned, our down payment, the closing costs and improvements for a total cost of 178,000 euros. From this, we're going to pay 73,250 euros, and the bank is going to finance 105,000 euros, right? So with the financing that we got from this mortgage, we're actually going to be paying almost 400 euros per month. And if we go down now into our revenues, our cash flow, we're going to see how it's going to look like by the end of the exercise. Every year, we're going to be expecting to have 12,540 euros of gross income. This is considering also the vacancy rate that we mentioned, the 5%. Now into the expenses that we also mentioned, let's consider that we're going to have our property taxes, the insurances, some of them are optional. You don't have to get them all, but just for the sake of this exercise, our maintenance and repairs, advertisement, community dues, and property management, if that's an option. For now, we're going to be paying 2,470 euros around, and our net operating income of revenues subtracting expenses is going to be around 10,000 euros. Bear in mind that this is before taxes and the mortgage. So for the taxes, we created this calculator for you to calculate what will be the tax rate that you're going to pay every year. In this scenario, we are residents in Spain, but you can pick if you're a non-EU resident or a non-resident and non-EU. Now the numbers of tax rate is going to change from 19 to 4%. But in our scenario, as Spain residents, and we're going to use this as a property is going to be rented out, we're going to be paying 19%. But you can also pick if it's your main home. You can also reduce dramatically the amount of taxes that you're going to pay. We highly recommend that you get an accountant that can help you, and we can also help you with finding these professionals so that they can give you a clear picture of your particular case. So going back to the calculator, we expect to be paying around 2,000 euros in taxes as residents. And if we look at the cash flow, now things are going to get more realistic because excluding the mortgage, we have a total cash flow of 3,247 euros the first year. And this might look as a low ROI, but actually if we consider that we are increasing our property value and the appreciation every year that Spain is having, we're actually looking into a total ROI of 28% per year. This will be for year one, and we have year two and year three that we can take a look into. But many people ask us, so is it better to put down more money for a down payment, or is it better to get a higher loan? So this, as this chart goes down, you increase your down payment means your cash ROI decreases. So ideally, you want to get the least amount of money put into this and the more financing you can get for this particular deal. Here you can see how the cash on cash return versus down payment plays. And you can see how, as our percentage of down payment increases, the return on investment decreases. For this other chart that is included in our calculator, our cash on cash is basically how much money or how much cash flow you can get from the amount you put down, which is represented in red. But the total ROI, which is all the money you can potentially get if you sell the property, which is in blue, and every single month, as we saw, we're paying our mortgage, we're building equity, we're getting a yearly appreciation, and also we're getting cash flow. So what we can see here is that the first 5 years, we expect the investment to increase in a higher potential rate because the appreciation is so high right now. This is an estimate that after year 6, the market is going to normalize in Spain. We don't expect increases of 15% every year for the next 20 years. So we modified it to be around 5% of normal increase, but we can see that our total ROI is expected to increase significantly in this graph. You can actually see that by year 30, we've already paid our mortgage and it's all paid off, and our returns are gonna start increasing significantly from then on. What do you think so far?
What I really want to know, Gustavo, is did we do a good deal?
Yeah, I think we did a great deal because, look, our net operating income is positive. We have a monthly cash flow, which is positive as well, even though we're paying all our expenses and even the mortgage. And we have a gross profit margin of over 7%, which our objective is usually to be above 6%. But the most interesting indicator for us is the return on investment after year 1, which is over 28%. And that's very difficult to see even in Spain right now because Valencia is growing so fast. We have such an appreciation. But this is just numbers. We also have to look into what the property looks like in terms of location. We also have to look into more intangible values. And I think this property being in Valencia, having a wide variety of tenants that you can potentially aim to, right?
Yes.
For example, students or workers or people that come here as digital nomads. So we actually have a lot of options. Demand is very high. So right now, I think we made a pretty good deal.
We hope that this calculator is as useful for you as it is and has been for us, and that it allows you to analyze all your property deals so you're able to make the best decision when it comes to investing your money.
Thank you.